Hey guys, what's up? This is Tyler from Division One Trading. Just doing a quick trade review on US30. So we actually got a couple trades on it this week, and the biggest one being we took a buy here during the New York session, and we took a short here during late New York. So we're going to be going over those two trades and kind of how and why we took them. So first thing, if you didn't know, this week in the news, they released the new CPI data, which is basically the inflation rate, the rate of inflation, not the inflation rate. But it was actually lower. So that's a good thing for the economy, and actually going to be a bearish thing for the dollar. But right here you see that news release happens here at 7:30 Central Time, and then it pushes. So we actually get prolonged push there, and then we finally run into some sort of structure and end up pushing down. So let's go ahead and get started with that. So here on the 4-hour, you can see you do have to look back pretty far if you want to see what kind of structure is there. So one of the structures that we did use is we used this level. It's a monthly high. It's actually June's high. So that's the level that we were looking at for price to reach. And price did take a while to get there, but once it got there, after that, we really only had this high here to look at. So once we started looking at these two levels, we had a little bit more understanding for our trade. So just remember that this is that monthly high, and then this is the high that came pretty much after it. Right, we'll just call it the next high. So there was a high and then a higher high right there that we knew would have liquidity. So now you can see more so what the weekly structure looked like, right? We had Monday traded up toward it and then came back down. Then we had that news release and it ran right to that monthly high. From that point, we have to make a decision. Are we going to trade back bearish and fill this area, maybe go lower, or do we start getting bullish, attacking that next high? So you can see we attacked that next high, which is a good thing. Now we've taken two levels of liquidity, right? But the only thing is, now that we've gotten bullish and we've hit a target, now they're more likely to retrace once they've hit those higher time frame levels. So we'll go into Thursday after the news. So right here's Thursday. You can see we traded all the way up and then broke down. So there were actually a couple opportunities in here to trade, but we're really just going to cover two of them. So the opportunity that we took, we were actually here on the 1-minute chart. So 11th at 1800. So once we had this here, it formed the high of the day. We broke structure here. So we were making higher highs and higher lows, higher high, higher low, higher high, higher low. And then at this point that shifted, made a higher high and then a lower low, then a lower high, lower low. So at that point, that's when the market structure shifted down. And then we just looked for our engulfing candle. So right here, we had a bearish engulfing, and then it trades up into it and engulfs again. That's actually a good sign. And it trades lower. And actually, when it trades back into this engulfing here, we get another engulfing as well. So lots of opportunity to get in there. You see it comes back to structure and then falls back toward that monthly structure. So from that point, we do have to remember that there is a chance that they can build support here, right? The old cliche, old resistance eventually becomes support, right? And vice versa, right? That's essentially the same level. So when they came into that level, we want to see, okay, when they have retracements, are they taking advantage of pushing the market lower? If not, right, what are they reaching for? So they leave structure and then they trade bullish, kind of left the market in the middle. Now, all we have is that they've built in support here, and we've had a really bullish market with bullish news that's willing to build in some support here. So we understood that as a likely scenario for them to want to start going higher than this high. We knew that that was possible. So here in New York, we'll start kind of cutting it up. You can see they opened, they went down, and they made the low of the day right there at that level, that old structure. Then they just really started building in bullish structure. Higher highs, higher lows, higher high, higher low, higher high, higher low. So you can see the market does start to break down a little bit. You get a lower low, lower high, right? Leaves this gap here, trades up into it during New York. So you get bond open, which is right here, 8:30 Central, pushes it higher, which really just ends up being a false move. So you can see, right, the high of the day, they failed to take it out, which is bearish, right? So once they reach down, they do break structure, right? But they're still supporting this low here, and they end up trading higher. So let's go down on the 1 minute chart. So this is our view. We were watching price, and once it started trading around, we were thinking about taking the trade, but it ended up gapping down real heavy, so we just let it sit. And as it traded to that low, we saw we had the low of London right here. So once we have the low of London right there, right, it's either going to trade down to it and then lower, or it's going to reject it and trade higher. So we already have this failure here at the high of the day. No other lines, but frame in London, right? We already had that failure there. It broke down, failed to take that low. So that's really all we had in here was a consolidation, failed to take the high, failed to take the low, and then turned around. Like I said, from the news and all the other bullish structure and the low of the day being right there at structure, good chance that we're bullish. So here on the 1 minute, we traded down with that heavy gap. And as we reached down right back into that same level, we had our institutional level here, 33,400. And we did have a little bit of slippage. We got in at like 33,402 or something like that. But we were trying to trade this gap fill here, traded up and actually came back, swung at us really heavy a couple times, ended up being pretty heavy consolidation, and then just traded bullish and actually gave more opportunities to get in as well. Once it made this low and broke this structure, started breaking all these structure levels, right? This fib high to low, you can see right here, reaches that high, trades back down below the 50. And for US30, we don't just look at the 400 levels, but we also look at the 50 levels, right? So not just the evens, but the middles. So right here, you can see they trade up and they pull back, they offer another trade right there at 450, and it ends up taking off. So this trade here actually ended up going for, so we got in, really we'll just call it 410, and it went for 345 points. So 34,000 pips. It's really, really good move. something that you don't always expect on a Friday, a full continuation, you know, but it's really just a matter of playing the odds and what's available at the moment. And again, like I said, once they showed support here and they wanted to go higher, this is really just an easy retracement to look to buy, especially with the heavy news from this week and inflation coming out lower than it has been previously. I think it all kind of just compounded into a beautiful trade to end out the week. But I hope this trade review helps. If you guys have any questions, just let me know in the comments or just DM me on Instagram at division1 the number 1 trading. But appreciate it, guys. Also, like and subscribe if you enjoyed this video. Have a great day.